But I think the best buy is silver. And, it's like turning back the clock. It is a gift. So load up on silver and, do that as soon as you can. You will not regret it. I think there's very little downside, again, $30, but the upside is enormous. And that's why I think the bond market did not recover along with the stock market. That's why yields on a 10-year Treasury are still close to 4.5, and on a 30-year close to 5. And the market looks like it's going to break down. And even if the Fed comes in with some rate cuts later in the year, that's not going to bring down long-term rates. If anything, that will push them even higher, because you have a movement out of U.S. dollars and out of U.S. Treasuries. And I think that by calling attention to the problems with our trade imbalances and threatening the world with these high tariffs, I think this is a bigger, wake-up call to foreign holders of dollars, to our trading partners that have large surpluses with the United States and who have been investing those surpluses in U.S. Treasuries and mortgage-backed securities and other U.S. dollar-denominated assets, that they are at risk because the United States doesn't like this. We somehow view this as being the world ripping us off, taking advantage of us. And Trump is determined to do something about these massive imbalances, which in and of themselves are not the problem. They are the consequence of the problem. And the only way to solve or get rid of the consequences is to actually solve the problem. But what Trump was looking at doing was covering up the symptoms and blaming our trading partners for a problem that we created. But I think this is the type of wake-up call that Biden sent when he put the sanctions on Russia. He let foreign central banks know and foreign governments know that it's dangerous to hold a lot of U.S. dollar reserves because we could sanction you if we don't like what you're doing. Well, now we've told them again that it's dangerous because we don't like you accumulating dollars because we're going to retaliate with tariffs, or who knows, we may even selectively default on debt held by foreigners because you've accumulated this debt unfairly. You've taken advantage of the United States. You've ripped off the United States. And so I think the de-dollarization trend that began under Biden is going to accelerate under Trump. And in fact, if we're not going to have very high tariffs, if we're just going to have low tariffs that will fill the government coffers with some extra tariff revenue, not nearly enough to offset the enormity of the tax cuts in the big, beautiful bill, and also not enough to bring any manufacturing back to the United States because Americans will just pay the tariffs and they may consume a bit less because of the higher prices. But I think that the only way that we're going to have a significant reduction in our trade deficit is through a significant depreciation of the dollar, because that will act like a tariff, except without the benefit of the government getting any tax revenue. But if the dollar goes down dramatically, not just, a small decline, but if we have a big decline in the dollar, then all of our imports are going to be much more expensive, just as if there had been a tariff. And if our imports become a lot more expensive, well, Americans aren't going to buy as many imports. But what that means is that the dollars that we used to send abroad to pay for those imports are going to stay in the United States, bidding up consumer good prices. Because now, if we're not going to send our dollars to China or some other place, they're staying here. And what are Americans going to do? We're going to spend them. Well, so whatever we spend them on, the price is going to go up. We've benefited for the last several decades of exporting our inflation. But Trump has made it clear that that's no longer acceptable because that's foreigners taking advantage of us. So if we're going to have to keep our inflation, then we're going to see much bigger price increases than what we've been accustomed to over the years where we were exporting our inflation. But the other benefit that we're going to lose is those dollars are not going to be recycled back into the U.S. economy through the financial markets. So the dollars that Americans were using to buy foreign goods were coming back, but into our bond market, into our stock market, into our real estate market. So pushing up asset prices. So that's one way that the inflation that the Federal Reserve was creating was being routed into financial assets. And so it was the price of stocks, bonds, and real estate that went up. And that made Americans feel richer as they continued to consume low-cost goods produced by our trading partners. Well, now Americans are going to have to spend their dollars here bidding up consumer prices, and now foreigners are not going to be investing the dollars they earn bidding up our financial asset prices. In fact, I think foreigners are going to be pulling money out of U.S. stocks and bonds and investing in their own markets, especially if the dollar continues to weaken and we effectively have a weak dollar policy. We're telling the world that if you hold U.S. assets, you're going to lose because you're going to lose on the foreign exchange. One of the reasons that U.S. assets have been so attractive over the past several years was the strength of the dollar. And so the foreign currency gains augmented the gains on U.S. stocks and bonds. But now, with that reversing, the headwind of a weak dollar is going to subtract from the returns that foreigners might have on U.S. assets. And in fact, if U.S. assets start to fall, if the U.S. stock market goes into a bear market and stock prices go down, and at the same time the dollar is going down, then that augments the losses that international investors are suffering when they're measuring their returns in their own currency. So I think you're going to see a lot of selling of U.S. financial assets, and central banks are going to continue to sell dollars and U.S. treasuries, and they're going to put more and more money into gold. And that's why this trend is not only going to continue, it's going to accelerate and eventually spill over into silver as individual investors join central banks in looking for alternatives to the U.S. dollar. And the best alternative, the most viable alternative, is gold and silver. Central banks have already come to that conclusion, and they're buying gold because they have to buy a lot, and silver doesn't really suit their purpose the way gold does. But individual investors, the customers of Schiff Gold, a lot of our customers, they can put money into silver. They don't have millions and millions of dollars or billions of dollars that they need to get rid of and convert to real money. If you're just talking about tens of thousands of dollars, well, you could easily take advantage of the low price in silver and convert your fiat currency into real money in the form of silver. Now, I wouldn't exclusively buy silver. I would also buy some gold, but don't forget about silver and don't think, hey, silver hasn't gone up, so it's never going to go up. It's eventually going to make a huge move and catch up to the price of gold. So in the meantime, I would take advantage. The team is still there at Schiff Gold to take your orders over the weekend. You can go online and you can fill up a shopping cart with gold and silver. I think you want to take advantage of the pullback that we had this week because I think it is a gift. I think we're near the lows. I don't expect gold to go back below 3,000, just like I didn't expect it to go below 2,000. But I think anything below 3,200 is a great buy. But even if you have to pay a little bit more than that, in the scheme of things, it's still good. But I think the best buy is silver. And, it's like turning back the clock. It is a gift. I mean, if somebody would have told me, a year ago that we would be at $3,200 gold and that silver would only be $32 an ounce, I wouldn't have believed it, right? But it happened. And I think it's a gift horse. And they say not to look those in the mouth, just take advantage of the gift and be thankful that you have it. So load up on silver and, do that as soon as you can. You will not regret it. I think there's very little downside, again, $30, but the upside is enormous. Not just 50, which is the double top going back to 1980. mean, it's hard to find a commodity that you could buy cheaper than it was in 1980, but that was also the high in 2011. But I think one day $50 is going to be the floor, and we're going to head much higher. So $100 to me is a very realistic target for the price of silver, and that's a triple where it is right now. For gold to triple, you're almost at $10,000 gold. Not that gold's not going to get to 10,000, but to me, it seems that silver will hit 100 before gold hits 10,000. And so that's why I think that you definitely want to be buying silver.